Okay, just want to share a story from the past. It's a family story regarding bank loans. In 1980, my family had an opportunity to advance its business. It was a business that had virtually no debt, had lots of hard assets, real estate, inventory, equipment, and in 1980, commercial loans were roughly right around 20%, maybe even slightly higher, 21% interest rates to do a commercial loan at that time. And we had an opportunity to pursue that required borrowing $250,000 at that time. So $250,000 is borrowed at a little over 20% interest to build a building. And the business opportunity was taken away in 1984, 85 era. I think it was 1984. So the company that came to us and said, sell our product, they changed their mind, not because of any wrongdoing on our part, but because of greed in the expansion of their business lines and taking over direct distribution of product lines in other marketplaces caused a ripple effect in who was a distributor, and basically regional distribution areas were reallocated. So they took our distributorship for the product. So now we have a building that we've built to distribute the product, and then nothing to sell. So you're sitting here with an asset that you owe a huge high interest rate mortgage on, and you got to figure out how to make it. And the thing is that over time, what happened was the interest rates dropped, but in our area, this is before the era of the internet, and where you banked with the local bank of your area. You couldn't take that loan to somebody else in a different town and refinance it. So in our area, there's two banks, and they both collude together to not buy each other's debt. And the other thing that's interesting is that when a bank loan, when you're in a small marketplace and the bank loans money to your competitor, they weigh the options of not whether you're a good risk or not, but how that's going to affect the other loan that they've made to your competitor. So it's a weird environment to have limited choices in banking, and they're basically loaning to both sides of every equation, so they come out the winner on either side. So here's where it gets a little tricky, is about 5 years into the loan, finally able to refinance, and I think the offer was 13.75%, and it was a variable rate loan, and here's the kicker. They also wanted a second mortgage on our home. So in the event that you default on the loan, not only do you lose the building and the property and your business, you also lose your home and you're in the street. The banks want it all, and they play scenarios where they help and enable and bet on other people to take you down so that they can take your stuff, and if they can get away with it, also take your home. And that ruthlessness of banking and the way the banker views your business, that was an eye-opener for me. I grew up in that environment. So I grew up with a lot of distrust of the banks, and that they are going to... I'm amazed. I'm still learning this process. Doing live streams for me is quicker and easier than wasting the time. I don't edit anything that I'm doing. My point in doing the videos is to try to, maybe as a journal for myself, to help my kids understand why this metal is in my safe. The the experience with this loan um, was a big event in my world and formed a lot of opinion for me about um, borrowing money and about what money is and about the way I looked at banks. Um, the bank's not your friend. They're there to make money, and the way they make money is by keeping you in debt and, if possible, taking your stuff. Uh, people say they don't want to take your stuff, they'd rather have you just give them the money, but the idea that they would put a second against our home when the amount owed was only 25% or 20% of the value of the initial asset um, is just bizarre to me. The idea that they want, not only do they want to take your entire business assets, your building, your real estate and your building, um, even though it's the money owed is only 25% of what the value of the property is, or what they also want to take your home, which is also worth double what the loan is. It you know it's it's a case of they'll take what they can take. They'll take everything if they can take everything. I watched a documentary about Westinghouse, and I'd highly recommend anybody that likes documentaries to watch any documentaries you can on Westinghouse. There was a point in the documentary where they discuss or mention that I think it was J.P. Morgan, but it may have been a different large banking person. I think it was J.P. Morgan, but they basically Westinghouse borrowed money to build factories and build something, and it just rang true to me with my experience with my family, and how the bank will bet on your competitor and advantage your competitor and leverage your competitor up to help put you out of business so they can take your assets. That really that really hit me close to home. But the experience that Westinghouse had was remarkable in the sense that I don't know if this is still possible today, but the idea that your bank can just call your loan and you've got to go out and find another lender or pay off the loan in full. Think about how much power that a bank would have over you if that's the case. The idea that you shouldn't borrow money that you can't pay back in a moment. Um, that the bank at any time can decide to bankrupt you because you owe more money than you can come up with in a crunch. Um, think about the times you need to borrow money the most. It's when you least can afford to finance out of your back pocket. I can't imagine what it would be like for somebody like Westinghouse, who has all of these assets, has all these people working for him, has all of these um, good reasons to be loaned to. That he was a good risk. Even though he's a good risk for the loan, they call his loan anyway. And that's just the way these people are. Anyway, my experience with the loan was nothing felt better than the day that loan was finally retired in our business. It took us the better part of 18 years to pay off a 30-year mortgage. It was refinanced twice along the way to try to get the interest rate down. I think we finally got down to 8% interest on that loan, and then whittled it down, and then did a final lump sum balloon payment to get rid of that loan. And it was like a yoke hanging around my neck for my entire early adulthood. In my case, I worked for free for my family for over 3 years, 40 to 50 hours a week without a paycheck, to try to help retire that loan. Um, it was just a family business at that point. All other employees had to be laid off. We just fought our way out of that debt. It took forever to get out of it, and it took a lot of hard work and sacrifice, and it took a plan. And for me, it tempers how I feel about banks. Maybe to my own detriment at times as I think about the different things I've passed on over the years. But I'm just not apt to borrow money if I don't have to. And I'm apt to look at the gold and silver as savings, and as a form of savings that doesn't require me to have my money sitting in a bank somewhere, because other aspects of my business deal with banking and I use banks, but every step of the way I try to have a policy of the fact that I can walk away at any time, that they work for me, that I don't work for them. And you can tell they don't like that. You can tell they want to loan you money. Anyway, I gotta take off. That's it.